there, Maverick Currency Traders. This is Rob. I'm joined by Ankit, and here we are in October. The first 3 quarters of 2023 are in the books. We've got 1 quarter left to make our yearly numbers, and then we close the books for the year, and we start another year. But we still have 3 more months to gather as many pips as we can, so let's get started here. In this session, we are going to talk about the previous week. We're going to look back at the news. We're going to take a look at each currency and what happened. Then we're going to score every single market, every single currency with a score, and that's going to tell us where to trade this next week. And then we're going to take those scores and we're going to pair the strongest against the weakest and look for setup opportunities.
Disclaimer. This video was created for professional Forex and crypto traders. Maverick Currencies is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional Forex and currency trader for Maverick, click the apply button in the video description. Let's get ready for next week.
Last week we had a down week. We called for a down week, and that is what we got. That being said, the market did try to bounce. It really tried to bounce on Wednesday and Thursday, but on Friday, boy, the sellers came in and took a market that was up 1%, and by the end of the day, it had closed all the way down. So overall, definitely a negative week, even though we did have a little bear rally in the middle. Last week in the currency room, we talked about how the bond market was the head leading the tail of the dog, and we said if bond yields go up, the stock market is going to suffer, and sure enough, that's what happened. However, on Friday, the bonds backed off a little bit, and we're going to talk about the PCE price index that came out that caused that backing off. Same thing happened with the dollar. The dollar was strong as well, and then we backed off of those highs. The only report I really want to focus on this last week is the core PCE price index on Friday. That is the Fed's preferred inflation reading. It was supposed to come out at 0.2, and it came out at 0.1. Let's also notice Canadian GDP came weaker than expected. The CAD was my favorite trade of last week. I made 2 CAD trades on it early in the week, and by the end of the week, the CAD really got slapped on Friday. And we'll take a look at the chart, and the CAD is no longer the stellar performer it was the first 4 days of the week. Other than that, this is a really quiet week, and I do want to point down to Friday night. We do get Chinese manufacturing on Friday night. This is going to be a report that will start the week off next week on either a positive or a negative note. So let's take a look at last week's numbers, and then we will wrap up last week and put it in the books. This is where we started out last week. We talked about how the growth currencies, surprisingly, were the strongest currencies in a risk-off market. Typically in a risk-off market, you see people piling into things like the Swiss franc and the yen and the dollar. The problem is those have been so strong all year, and then some things have been happening to those over the past 2 months, like the Bank of England did not cut or did not raise rates. The Swiss National Bank did not raise rates. The Japanese yen, their central bank kept rates ultra low. So all of a sudden, the places where people usually go to hide, they weren't performing well. So by default, in currency, the money always has to go somewhere. So if money is leaving safe currencies, it's got to go somewhere. And so the beneficiaries have been the Kiwi, the Aussie, and the CAD. We have hated cryptos for a while, and we still hate those cryptos. We'll check in on them here in just a second. If we take a look at the weekly performance here, we had the S&P down about 1%. The world market's down about 1%. Crypto was up, but that's all Bitcoin Cash. We're going to take a look at that here in a second. Gold got absolutely slaughtered. Now, I know we're used to big returns in cryptos, big returns in the markets. Gold usually doesn't move 4%. This is a really, really big move for gold. And why it happened, I really can't tell you. I went out and searched. I've seen people's theories. None of them made a lot of sense. It should have been going lower anyway over the last 2 to 3 months. Gold is inversely correlated with the dollar, and as the dollar's been strengthening, gold has really been holding up quite well, better than it should have, and maybe that trade just finally caught up to it, and it plummeted. Oil had a strong week. We're now up into the mid-90s on oil, another thing putting some pressure on the stock market. So here we are on the S&P, and you can see that we did have a bounce here on Wednesday. And I actually did the Wednesday end of day video, and I talked about how, look, this candle here is telling us that buyers came in at the end of the day. And I said, if we get a green candle on Thursday, then we are likely to make a run up to this area. And sure enough, look at the run. We actually gapped up to that area, and we did nothing but sell off. Look, this is simply just a bear rally pattern. We know things don't go down in a straight line. That's not how things work. They go down, they rally. They go down, they rally. They go down, they base. They go down, they rally. That's how things go down. So we just had a 2 or 3 day little rally here. Nothing has changed. This market is still decidedly bearish. If we take a look at the performance, like we said last week, this is not textbook. If you were to read a textbook of what is supposed to happen when equity markets fall, this is not what you're going to get in the textbook in currencies. That's why at Maverick, we always say, trade the market in front of you. Last week, we said, hey, look, everyone, the Kiwi, the Aussie, and the CAD are showing the most strength. And the weakest have been the Swiss franc, the yen, and the pound. As you can see here, for the most part, that was true. The CAD got slapped on Friday, but if we took these numbers on Thursday, the CAD would have been one of the better performers of the week. The yen and the Swiss franc, which usually do well in a market like this, they fell because that's their relative weakness, just holding in there. Next up, take a look at the cryptos. Cryptos had a decent bounce. We'll take a look at the charts, and you'll see this doesn't mean anything whatsoever when we take a look at the longer-term chart on this. So let's jump into those charts, and let's take a look at where we are right here, right now. We already took a look at the S&P. I want to take a look next at the bonds. So we talked about this major breakout in bonds, and we moved higher off this. And you can see we reached a high on Thursday. Thursday we reversed, and Friday we backed off. But look, we do have a long lower shadow here on Friday's candle. That's telling us that, we're not getting big wholesale sell-off. We're getting a little bit just of profit taking, and there are still some buyers in the wings. Up here, up in the 4.5%, 4.7% range, this spells trouble for equities. If we could back down into the 450s, maybe equities might get a little boost, but until that happens, equities are likely to stay under pressure. If we take a look at cryptos here, you can see, look, they had a good week. It was a nice little run here, but did anything really change? The only thing you could say that changed is we are now trading above moving averages. Okay, that is a first positive. Like if I had a checklist of all the things I needed to see before I got excited about going long in cryptos, this would be like the first check. What would I need to see after that? Well, I would like to see a 20 cross above the 50. That might be another check we get this week. I would like to see us break out of this resistance that we put in back here. That would be another check mark. So look, I'm not quite as negative as I was on cryptos 2 months ago, but I'm still not positive. I'm just more neutral here of where we are. Look, if crypto can do all that stuff, if we can get that cross, get that breakout, I will absolutely get excited about it. But until then, I have to follow the price action. Let's take a look at the calendar this week. It is the first week of the month. We know what that means. We means it's going to be a busy, busy week. Just take a look at Monday. US ISM, RBA that night, Powell speaking. Look, Monday could be absolute fireworks when we see that. Look at Tuesday. Swiss franc, CPI. We have the JOLTS job openings out of the US, and we have the RBNZ. Tuesday looks to be dynamite. And frankly, if you take a look at it, Wednesday and Thursday kind of look like breather days. And then on Friday, we get US and Canadian employment. I want to talk a little bit about the RBA and the RBNZ coming up. Okay, what is your call on what is likely to happen? I think it's pretty much a done deal that both of these central banks are on hold. but you think they are more hawkish or dovish?
I mean, that's a big question here. I mean, if you go back with the previous statements, they have indicated more on the dovish side, or kind of hold it for now. I mean, the RBNZ kind of took that stance there. So the big question is that has their number being inflationary? And we haven't really seen the CPI numbers being flaring in those countries. So I am going to go into this meeting thinking that they will be on hold with a bit of a dovish outlook. Yeah, I think the only way they would have been under pressure to raise rates if, let's say, everybody else is raising rates. But again, U.S. has held rates. I think they probably will do the same and maybe have a bit of a cautious outlook. But I'm not going in with the hawkish statement. I think this probably would be more on the dovish side. But we'll see what happens. We are seeing the prices running into it, so the sentiment is positive. So we just have to kind of wait and see. Once that clears out, we'll have a better clarity on if those currencies have a small pullback and run right after. We know that then those currencies wants to run. But yeah, with the central banks, I think they're probably all on a bit of a hold here.
I agree 100% with your outlook. So I'm going into those reports with my fingers crossed, hoping and praying that they do come out a little dovish. I would love to see a quick spike down in Aussie, a quick spike down in Kiwi. I like Kiwi even better than Aussie. So frankly, I'd really love to see it out of the Kiwi. I would love to buy a quick spike down on the Kiwi on those announcements. As Anka said, they've been showing the most relative strength of anything. Let's quickly talk about Friday before we wrap up this calendar. At 8:30 a.m. Eastern Time, we're meeting live. So 15 minutes before that, Maverick Traders, we will be trading that report live. Come join us, as usual, the first Friday of every month. So to wrap up this week's outlook, we went through the calendar. We talked about the two central banks. Let's talk about where we are in this market. And I'm going to spend a little bit of time here to go over this because I do think this is important. Markets move in waves. Everyone knows that. Like, we had strong waves in May, June, July, and then August it peaked, and now we've had a negative wave in August through September. We've talked about how September 1st through October 15th is the seasonally worst 6-week period of returns in the stock market for the entire year. And we warned everyone, hey, get ready for it, get ready for it. Last year, it was like perfect. This year, it started a little early. So here we are now going into the first week of October. If we were just trading these seasonality patterns, we would be thinking to ourselves, hey, we're probably going to see some negativity in equity markets for the next 2 weeks. And then the seasonality changes, and we typically get a run into the end of the year. Think about what's going on right now. Right now, the U.S. is going to be shutting its government down over this weekend, most likely. There was just a vote in the House that failed on Friday. So at this point, it's pretty much a done deal. We are going to have a shutdown. Let's talk about what has happened in the past in government shutdowns. In government shutdowns in the past, usually there's a pretty negative market going into those government shutdowns. I want to say the average drop in the stock market is around 6%. So going into a shutdown is very negative. We've seen exactly that. When the government is shut down, the average market return is 0. Some it's positive 1 or 2%, some it's negative 1 or 2%, but the average return is 0. So when the shutdown actually happens, it's not as negative as the fear going into it. And then after the shutdown is over, it's almost a guarantee that there is a 1, 2, 3% rally after the shutdown is over. So here we are. We in the period where we're going into the shutdown. It is almost always negative. In the shutdown, it's mixed, positive, negative. After the shutdown, we get a rally. The other thing we're seeing is the auto worker strike. The auto worker strike is intensifying. More plants are going off. That's also putting pressure on this market. So I want everyone just to understand where we are. We're in the worst 6-week period of the year. We're going into a government shutdown that is typically negative. We have major strikes going on in the auto workers, which is negative. All 3 of those things end within a week or 2. Most government shutdowns, I want to say the average government shutdown was like 8 days. The longest one was like 35 days. So here we have three things that are very negative for the markets that are likely to end in the next 2 weeks. Until then, I think you do want to stay more bearish than bullish on equities, which means we think interest rates are going to stay strong. We think dollar is going to stay strong, all that stuff. But I want everyone to get ready for when the shutdown's over, the strikes are over, and we get past October 15th. It is most likely going to look like a better market overall. I want to put that out there and just get you thinking. But of course, we're going to follow the charts like we always do. So all the stuff I just said, that's cocktail talk. We follow the charts, but all that talk helps us drive our overall trading vehicle where it's going. I'm going to run through cryptos. Ankit's going to run through Forex. And as you know, I'm going to run through these fairly quickly here because I already talked about crypto. We don't have any positive things yet to talk about other than it's no longer negative. That's the one positive thing we could say. It's no longer horrible. It's just meh. Here we got Bitcoin, 0 on the trend score, +1 on the velocity score. There's nothing to get excited about. Bitcoin Cash, if you did want to trade crypto here, okay, Bitcoin Cash, if this thing can pull back and hold this area and make a run higher, fine. Go long Bitcoin Cash. I don't think it's a great trade, but go ahead and take it if you want. Ethereum, as you can see here, we're not out of the woods yet. We're not out of that 50-day moving average. Things are looking better, but we're not there yet. It's just not any positive things to talk about. Litecoin, even worse. I mean, take a look at just the volatility has completely left Litecoin. No one really cares about it at the moment. So until they do, I think you just sit out whatsoever. So overall, cryptos are they're not terrible anymore. They're just meh. They're just so-so. All right, Ankit, take us through currencies.
Absolutely. Let's just start with the technicals here. So the dollar, has anything changed on the dollar? Daily chart, everything looks the same. I mean, we had a nice test in the last couple of days, but you know, the way we are closing today, this is where we are still back in that range bound price action. We got directional, we did pull back, but now we're just right there. So again, this is where I always like to say, if you're trying to be bullish the dollar, you know, look for a previous high to be broken. But at the same time, if you're trying to short the dollar, you got to get the markets telling you, the technicals telling you here. I don't think the technicals are ready yet. So I think overall, stay with the trend, which is on the upside. Now, looking at the yen, let's talk about the trend here and moving lower. Now, that looks like a clear break to me. We did end it up with a bit of a hammer candle today. But again, usually what we have seen is where we have a big risk-off event, we end up seeing a little bit buying coming into the yen. But at the end of the day, all those buyings are just selling off. So just realize that when you are seeing that kind of negativity in the markets, you know, steer clear from the yen. But once that kind of clears out, and especially like Rob said, when we have the government shutdown over, we'll see what happens with the yen. But overall, nothing changed with the yen. Bear rallies being sold, and that seems to be the pattern here. So I have no desire to buy the yen, but only to sell on the rallies. Now, there's some of the European currencies that has been taking a hit. So last a month, look at that September month, has been terrible for the European currencies. And ironically, those are the currencies that were the best performers. So Euro, Swiss franc, and the pound. Swiss franc took the biggest tumble that we have seen in the past year and a half. So what does that mean here? So, I mean, we are back to the breakout point from early this summer, and now we're consolidating. The longer we consolidate, that means that it wants to gather some energy and get lower. So right now, the technical looks bearish. Is it ready to be shorted yet? I mean, I'd rather see some consolidation before we head lower. So that's where I stand with the Swiss franc. And now looking at the euro, very similar pattern. So we are seeing a bit of a back and forth in the euro and Swiss franc. So again, pay attention to the euro Swiss franc pairing just to know which currencies to be shorted at what time. Right now, euro has been holding a little bit better compared to Swiss franc, but if that's switch, then I'll be looking at more on the euro to the downside. So overall, very similar price action. Now, the British pound. I mean, I think the British pound and the Swiss franc were kind of the same category. They were both the best performer, and they both took the biggest hit. So the money did come out of it. Now, look at that anemic price action, just making a small base. So the stronger the price action is, the easier or the faster it bounces. The fact that it's not bouncing at all is actually giving a bit of a negative outlook here on these currencies. So the trend score is a -2, but I think we got to wait for that consolidation. And once we break below that level, I think that'll be ready for a break to the downside. Now, talking about things breaking out, and look at that CAD. I mean, CAD has been an outlier, especially the month of September. CAD has actually done better compared to the dollar. I mean, we look at the dollar chart, we have a big consolidation, but look at the CAD, had a big outperformance. So we got a big pullback this week. Now, the question is, has anything changed? I mean, we're still above the 20 to 50 moving average. For a trend-changing move, I would love to see a bit of a lower high and a lower low. This is still a technical bull pullback for me. So I know whenever we see this price action, we want to just jump into the short. Just realize that overall direction still to the upside. And if this is going to head lower, we'll probably see a small recovery and then just roll over from there. But again, realize the CAD Bank of Canada will be in focus in a couple of weeks, and there's big rumors that they might be raising rates. So again, we'll find out. I think next couple of weeks will be interesting. So overall, bull pullback for me. I have to wait and see what happens in next week on the CAD. Now, Aussie and Kiwi, they're the more interesting one here because, we talk about correlation, we talk about risk on and risk off. Market's taking a hit, but that's not translating into the price action. And this is where we say, if the correlation is not working, then put it aside, follow that price action. We got a big sort of a reversal here. Again, the similar price action that we were seeing across the board, the Aussie, Kiwi, and the CAD has been pulling back, but realize that they're not as bearish. We have a bearish candle today. We'll have to wait and see. Again, for Aussie, for me, is on hold until we hear from the RBA, and after that, once the dust is clear, I'll be able to pick that direction. So looking forward to the RBA on Monday night. But overall, I think price action still looks bullish, but the price action looks much bullish on the Kiwi. So we'll see what happens next week, if there's any sort of divergence between the RBA and the RBNZ. But so far, it's clear that the Kiwi is doing the best. And again, realize that they've been doing terrible for the last few months. So they're just doing a little bit of a catch-up trade. So this is where stick with the trend. Bull pullbacks are getting bought out. Bases are getting bought out. That's what we got to do. So for me, nothing has really changed as far as the direction goes. Same scenario last week and same scenario this week. Where we are seeing rotation is when we look at the velocity scores and when we take a look at the CAD. I think the CAD is the only one that had the biggest turnaround, but outside of that, everything is kind of moving along the same way. So as we move over into October and the new month and a new quarter, I'm very looking forward to seeing what happens if there's any sort of rotation that comes into these currencies. But right now, if the markets have been terrible and Aussie Kiwi has been rallying, I think those are the ones that we're going to pay attention to. But RBA and RBNZ next week will be the true test. So once that's cleared, I'll be more directional based on what happens with those statements. Right now, again, central banks are the one that are moving the currency. So if they do say something negative or dovish, I won't be surprised if those currencies give up the game. So stick with those news events and then look for a follow-through move.
Thanks, Ankit. And I totally agree. Aussie Kiwi to me look great. I'm actually really happy that we're getting the RBA and RBNZ early this week to just get that out of the way. Once those are out of the way, these are a really good looking buy based on where we are in the market. We have the dollar and CAD. They're super strong, but they're pulling back right now. So early on next week, I don't have anything I want to buy Monday, Tuesday until I hear from the RBA and RBNZ. What to sell is pretty easy. The European currencies and the yen. And for me, the yen is number one on the list. But as Ankit said, the velocity right now is pretty messed up. So the strongest currencies, the dollar and the CAD, they're pulling back. The two currencies that are okay on trend They're okay on velocity, but they've got central bank announcements coming up. I need to wait for those. As you can see here, I'm just not looking at all to do anything until we get the RBA and RBNZ out of the way. But let's get ready for possible trades this next week because, again, I'm looking for long Aussie, long Kiwi out of those central bank reports. Do you want to be a professional trader? Maverick Currencies is the oldest US-based Forex and crypto prop trading company that will pay you for trading with our capital. Trade our capital and keep 70 to 80% of the profits. We are looking for traders just like you that are hardworking and motivated. Click the apply link on the top right of this video to see if you have what it takes. That link takes you to a 4-minute video that explains the trader position available, and you read a list of FAQs that answer pretty much all the basic questions you have at this point. After watching the video and reading the FAQs, if you're interested, fill out an application, then you'll watch the full-length recruiting video, and then schedule an interview with one of our traders. Are you our next trader? So my number one trade is Kiwi on the long side. My number one trade on the short side is yen, so I'm looking at Kiwi yen. All right, here we are. As you can see, we are up at multi-month highs, and today we poked our head out of that resistance, but we could not hold it. So, look, I really like where this is going. It's fine. We've spent a lot of energy over the past 5 days getting from 87 all the way up to 90. Understand, that's about a 4% move. That's a big move. I want there to be a pullback. I really want there to be a pullback. And the places I'm looking for is a pullback to this last breakout level. So for me, 89. I would really like to see a pullback to 89. And maybe that comes on Tuesday. Again, any short-term spike down to 89, if we bounce there, I'm looking to take a long here on Kiwi yen. So Kiwi yen is my number one trade, but that's on Tuesday. Let's take a look at Aussie yen, because Aussie yen could happen on Monday. Take a look at this on a daily chart. It looks great. It looks fantastic. Again, we failed on our breakouts today. That's fine. Where are we looking for a potential pullback here? Well, actually, it's right here where I would like to be. So look, going into the RBA, we'll have to see what happens. I would want it to pull back to the last support resistance point, which it really is at the moment. I'm going to be on pause here for this, but I like Kiwi yen best. Ankit, what do you want to take a look at?
Well, looking at some of the pairs, I want to take a look at CAD franc. A lot of the Swiss franc crosses have made a really big reversal, especially if you look at the daily chart. So the big question is, whenever you see a run like that, you can see we just retested that prior resistance with pulling back. If we see a continuation of the sell-off in the European currencies, then I think we need to take advantage of this bull pullback. I've been meaning to get long this, but again, when the price action looks so extended and so overbought on RSI, I would love to see this pull back a little bit and then sort of reload on this. So I really like CAD franc the way it's looking here. I just want to see this as a bull pullback, and if we can break above the 68, that will be a time or place to get long. So Euro CAD is a very similar pattern too. We broke a nice support level and we're just rebounding here. And again, same thing. We got a nice little breakdown on the daily chart and we're just rebounding here. So the big question is this a rally you want to sell? And personally, I'm still on the camp of that. I mean, we'll see what happens next week. But technically, it kind of gives you those long opportunities. And lastly, the Kiwi Swiss franc as well, Rob. Like, same thing. Like a lot of the Swiss franc crosses made a big reversal that we haven't seen for. I mean, go scroll back and take a look at that clean break. So if we just trade the technicals, this is what's really moved as far as the technical goes. Of course, it looks very overbought on those charts, but just like how we saw in the CAD Swiss franc, any sort of pullbacks, I think will be a good place to getting long into. So these are the ones that I'm paying close attention to. But outside of that, I think the big question is where the market's going to go. If we get a pullback from these RBA and RBNZ, and those get erased quickly, then I think those might be bringing us a good buying opportunity. So I'm really paying attention to that one and see what happens after those announcements. And if those pullbacks are short term, then we want to get long off that weakness here. So we'll find out next week. So those are the ones. Aussie Swiss franc Rob, same thing as well. They just retested the prior support, which is now the resistance. So look at that beautiful, beautiful pattern there. If we pull back and then we rally, I would love to kind of get long on that one. And we can do the exact same thing with the European currencies as well. So same Euro Aussie and Euro Kiwi. Right now it's a tough call to see which one will be the best. But again, same thing. Getting some rallies that we want to probably sell into. We got the price is trending lower. So I think that's the right place to get long and short. Looking forward to trading some of the news events next week.
Thanks, Thanks, Ankit. Let's wrap this up. The overall market looks weak here. And hopefully you guys listen to what I was saying, how I think we will stay weak. We are in this period where we do have a lot of weight on this market. We have a lot of things that are causing people to doubt. Whenever that happens, you get selling. Those things are temporary, but they are not going to happen on Monday either. So I think we still have some period of bearishness. Once we get the rally, I really even like the Aussie Kiwi even better. So I love that the Aussie Kiwi are showing some relative strength when the market's weak, telling me that when the market does turn back around, those will likely even strengthen up more. Thanks for having a great third quarter, everyone. And let's put it in the books. The market doesn't care what we did last quarter. It cares about what we do next quarter. So let's go out there and make some pips. Goodbye, everybody.